Hey, welcome back to 51% Attack. So we'll move quickly again today. We saw that the crypto spring indicator has fired off. About 3 days ago, and I made a little video to celebrate that. If you want to see the provenance, the pedigree of where that comes from, you can see my last video, but we don't have time for it today. Basically, the indicator has fired off, meaning that against all odds and what everybody else seems to think, the bottom is very likely in, for Bitcoin at least, which would put it at 57,750, I think. So, huzzah! That doesn't mean up-only mode, but I think there's a lot of alpha to be had in knowing that the bottom is probabilistically in. So anyway, moving on to some of the last things that we can really know about a bear market. Bear markets are easy in terms of targets, and bulls are more difficult. But we'll do what we can with these last few milestones in the bear market. So here we go. First things first, we've got the Supertrend up, and we know that once the spring indicator has fired, that's where Bitcoin's going to head. It would head there even if the indicator didn't fire off, but it always does. And so right now we're looking at just under 66K. Now, typically in past years, just like with the indicator, which took 2 attempts to break, the Supertrend also tends to take not 1 but 2 attempts to break through, which can be a little frustrating, but hey, that's the nature of things. So back here in 2022, you can see it stabbed upwards, rejected down pretty nastily. That was about 7% down. And then on the second attempt, a few weeks later, it did in fact break through. In 2018, here's COVID. COVID's kind of an exception, but hey, we gotta address everything. It didn't necessarily take 2 attempts after the indicator, but it actually did poke through the very same Supertrend level, which here was 74.50. It actually did it prior to the indicator, back here on it was about a week before the indicator fired off there. So you know what? I'm counting it. It spiked through. It was before the indicator here in COVID, but hey, attempt number 1, and then on attempt number 2, it broke through the daily Supertrend. Here's the actual bear market of 2019. Crypto spring indicator. It spiked through the Supertrend the day after on that Saturday. Spiked through, came back down, went back down a little bit. So again, you have to watch out for that spike and the first rejection, because this did come back down. Actually, it wasn't too bad. It was about 2%. And then on the second attempt, this is a little bit of a fake out, but hey, we trust the charts. It did, in fact, break through on the second attempt. Even though it had a spike, a scary spike, it broke through on the second attempt. Going back to 2014, 2015, here's another close call. Look at this one. So it actually spiked through the Supertrend, the daily Supertrend, on the day of the indicator. Look at the high, 249. Supertrend was 248.25. It did, in fact, spike through, came back down, rejected, 2%. And then on the second attempt, it went back up and through the Supertrend. The one exception, which, there's always got to be little flukes, but it is, of course, 2011, which was the Wild Wild West. And, yep, you're going to notice that it never spiked through the Supertrend, but it got damn close. It was at 315, and the closest it got on this so-called first attempt, it was 314. It was 1 penny off. If you're going to crucify me for that, then string me up. But anyway, what would that look like in the modern day? Here we are in 2026. Daily Supertrend is, like I said, is at 65,740 or so. So we are looking for it to sort of attack here, spike up through, maybe into the 66.2 liquidity line, maybe reject a little bit. I don't know how much it's going to reject. We've seen 2%, we've seen 6%, or 7%, but always beware. If you're not just accumulating, if you're long, I would consider a holding pattern, just as we hit 66K, in case it does the spike through and come back down, especially if it closes that day, the day of the spike, back below 65,740. Then, you have to at least assume the base case is like prior years, where we're going to have a little bit of a rejection. And then on the second attempt, come back up through it, and we'll be off to the races. So what happens once we break through the daily Supertrend? First of all, that's an exciting target, 66K there. I imagine that's what, another 3% from here. Yeah, it's about 3%. So far, beloved ETH, who forms similar patterns around the daily supertrend, but isn't as tied to it. Like, it's broken through in past years as Bitcoin was still working on it. It didn't here in 2022, but I think 2018. Yeah, so ETH like was above it as Bitcoin was still on its second attempt. So we're not gonna like marry ourselves to anything for Ethereum, but you can see another like 3% here would take Ether up into that 1875, 1900 area, which would be pretty exciting. But going back to the Bitcoin chart, which is what determines the timing. I shouldn't use that word, timing. Determines the level of everything. So it's going to break through the super trend, and then more or less after that point, it's I hate saying up only because it means something to some people, but in general, you're going to see just a massive amount of I don't know what else to call it, just like an upward surge into our next target, which is going to be the weekly super trend, and I'll show this to you. Here it is. It breaks through in 2011, goes damn near right to the weekly super trend, and then kind of takes a little breather. We'll talk about where the breather could go in a second, but 2011 again is the wild, wild west. I'm just showing you this because it gets damn close, and then the rest of the cycles are going to fall into a very crystal clear pattern. Okay, here's 2015, and this is where I'll start showing you the pattern. It's nothing scientific. It's just what happens. So this is where this is the week that Bitcoin broke through the daily super trend. It's not. When you're actually living through the moment, yes, there are drawdowns, within these weekly candles, but for the most part, this went up 7%, 16%, right into the weekly super trend. And then as you can see, it has some crazy volatile action above it. You're more than welcome to try to catch this move. I would be very, very careful, especially as you approach a prior trading range. We'll talk about that after I get through this section. But it goes to the weekly super trend every single time. It goes through it by some amount, an amount that we don't really care about. You have to manage your risk once you're above the weekly super trend. But guess what happens? Draw a straight line through the breakthrough level of the weekly super trend when it crosses it. And I was supposed to draw a line there. Okay, I'm going to delete this terrible line, but just to show you, you basically draw a line through the super trend. It always retests it before up only mode and the bull market before the bull market starts in earnest and we really enter some crazy candles. So like right here, it went right back to the 312.30 line, retested it there. I'm going to get rid of this awful dotted line because I don't want it, but just use your imagination as we go forward. Okay, so again, goes to the weekly super trend, goes above it by some amount, and then retests it with a red candle. That's in 2015. Let's go take a look at, here's the 2018 bull market. So again, goes, here's where the daily super trend broke, had, some grindy, but still upward action, some nasty drawdowns, but still went up, and then finally got the God candle into the weekly super trend. And then look at this right here. As it finally breaks through the super trend here in April, if you were to draw a horizontal line here, you don't really have to, but because it's like a very small percentage away from the close of this candle. But if you drew a horizontal line right at the breakthrough level of 52.85, indeed, this first red candle comes back through it. You get another chance to, you can assess the situation, you can position yourself, whether or not you believe in what you just saw, and then you get some beautiful upward momentum into our next target. So again, draw a horizontal line through the super trend breakthrough, and you'll get another chance at it. Let's go to 20. Oh, here's COVID. Guess what? COVID, not quite the wild, wild west, because look, you break through, you go to the weekly super trend. It was a little wonky, the journey there, but again, this is COVID. Still, you go to the weekly super trend, you break it, draw a horizontal support right at the breakthrough moment of the super trend, and look at that. 6 weeks later, you get another chance at it, and then you keep going. Moving forward, so that was 2015, 2018, COVID. Here's 2022. This was a series of God candles. Those aren't guaranteed. Sometimes it's grindy, as you saw. But anyway, here's the bear market there. You get the daily super trend and the weekly super trend God candle kind of occurred in the same week. So here you go. Daily super trend breaks. Weekly super trend becomes the immediate target. You go right to it. You break through it here on that following week, draw a horizontal line across, and oh, look at that. You test it not once, but in fact twice. The second one's not quite as likely. This was the U.S. regional banks crisis that caused this. But look where it closed. Closed right back on that weekly super trend breakout point. Is that not crazy? And then from there, you get some nice upward movement, and you pretty much leave these numbers behind forever. Then you could call that up-only mode, despite there being plenty of drawdowns and consolidations along the way. But again, draw a horizontal line, and you will get another chance at it. Let's go see what that looks like in 2026. So this would be, I don't know what we're going to get. I trust the charts. It's going to go to the weekly super trend. I don't know if we're going to grind up to it or if we're going to get a God candle. The weekly super trend is still way up at 81.6. That sounds crazy right now, right? But guess what? It always happens. So once we get the daily super trend breakout, which we're not at yet, there's still plenty of time. This could take a couple weeks. I think the most it's taken is about 2 weeks after the spring indicator. So, this might take until, that third week of July. But once it breaks out from 66K, it's destined to head for the weekly super trend. Currently, it's at 81.6. It might drop, another level before that. Like here, it dropped $1,200, so maybe it drops to like 80K flat by the time Bitcoin's actually attacking it. But that is going to be the next target, and so maybe it is going to be a God candle. I don't know. And once it breaks out at, let's say, 80K or something like that, we're going to draw a horizontal line, and we know that we're going to get a chance to assess the situation, and then we can set some positions for what should be up-only mode. As for what comes after that, I got to admit, it's tough. There's not a lot you can really derive. Like I said, bear markets are easy. This was a really easy bear market. It hit every single landmark that we knew was coming. That's why, despite how crazy high this weekly super trend is for us to hit, I mean, why doubt the chart now? We're like 6 for 6 this bear market. It's been fantastic. However, after it goes to the weekly super trend and consolidates and all that kind of stuff, the only real sort of target I can give after that for like the consolidation, it goes back to the age-old rule of, in a bear market, Bitcoin never re-enters a prior trading range. That's how we derive such targets. When we were talking about the dead cat bounce, back in November, December, we were talking about that on the Discord, and it's like, look, the prior range was 100K to 126 or whatever, 125K. By definition, in a bear market, this dead cat bounce could not breach and certainly couldn't close above 100K. It wasn't going to happen. And in fact, Bitcoin stopped at 98K. Once again, with the living cat bounce in March and April, we derived this target in other ways, that 82K target. We got it pretty much right dead on. Like, here's the target zones we drew, months back, and then here's where Bitcoin hit. So, pretty much right in our zone. But Bitcoin is not allowed to enter the prior trading range. The prior trading range was, if you go by Wix, it was like 82 to like 97K. Without Wix, it was, even if we gave it some grace, it was like 87K to, 93K. We know Bitcoin's not allowed to close within this range. It got above one set of wicks, the lowest, the capitulation wick from November. It got in there and then immediately rejected out, which is more or less what we knew was going to happen. So now that the bottom is starting to form around the spring indicator, we know that Bitcoin is now going to be allowed to start, once it closes above the daily super trend. I'm sure you'll notice this as I talk about it in a second. The daily super trend, we said, is at about 66K. Guess what? When you start closing above that, look what you do. You enter the prior trading range, which means one of two things. You're either going to reject hard out of it and the bear market continues, unlikely given our signals, or you're at the early stages of a bull market, which is where you're allowed to enter prior trading ranges. So taking that into account, let's go back. I don't really want to go to 2011. It's kind of wonky. Yeah, I mean, I guess we'll look at it briefly. Like, you figure coming out of the weekly super trend, like, where do you go? The next target after capitulation, or sorry, after consolidation could be the next trading range. In the case of Bitcoin, which was so young on exchanges there, it was like basically the all-time high, and that's kind of what it did. It's kind of boring to like talk about this. Like, there's nothing really there. Oh wow, it went to the old all-time high. We know it's going to go to the old all-time high. So there's that. I think it gets more interesting as we move along. But again, there's still not a ton to go off of, and I'm not hanging my hat on any of this. Once the bear market's over, I'm kind of like, this is my mastery. This is my expertise. So we're going to have to use other metrics to tell, when it's time to sort of take our foot off the pedal in terms of positioning. Here in 2015, we broke above the weekly super trend. We got the retest, and then our consolidation period, if you draw a line across, it was because the super trend was kind of already at the prior trading range. It sort of went one above it. So maybe this is something to look at. Maybe if the weekly super trend surge takes you past the first prior trading range, perhaps then we can look at the second to last trading range. So we'll keep that in mind as we move forward. I've kind of looked at this before starting the video, but I'm also kind of doing it live. Here's a good example of I don't know what to make of this, where you get the weekly super trend breakout here, you get the retest as we just talked about, and then it just surges into here, and it doesn't even get anything close to a consolidation. This isn't consolidation, but doesn't even get a decent red candle until it enters this mess of, I guess, a trading range. We're almost going to be eyeing this entirely based on what 2026 looks like currently, but we're just sort of collecting bits and pieces here. But it roughly hit this trading range here. It was a massive trading range. It's really hard to look at. COVID doesn't have such a thing because COVID wasn't a real bear market, so it doesn't really work. It kind of just went to the old breakdown weekly super trend line. That's kind of the only horizontal I can see, but I don't want to hang my hat on that. That's weird, and that's not repeatable and reproducible. Here in 2022, we got weekly super trend breakout, we got the retest, and then we were off. And then where did it hit consolidation? Kind of at the bottom of the old trading range here. This one looks better. In fact, this was a decent trading range from both the June 2021 Fed nonsense and the breakdown from 2022's bear market. It's a little iffy. Look, let's just go forward to 2026. Let's see where we can even go. Let me make sure this is saved, and then I'm just going to remove these drawings for a second. Okay, so we get through the weekly super trend, we go here, we go down, we retest it, and then where would we go? Getting through here almost puts us into this trading range. Remember, it's assuming we get above the super trend at like 80K, we're already kind of into the prior super trend, into the prior trading range. I guess I would probably wager, based on diminishing returns and reduced volatility, it's very possible that just the top of the DCB trading range could serve as the next sort of target and consolidation area. Let's say like 93K to 98K. This is probably my best knee-jerk reaction to like where the consolidation would occur, in the months following the first, surge. Because beyond that, you just kind of get into these, I guess the next range is sort of 100 to 110K. That would be the next one, which sort of encompasses the January 25 top and then this area before the all-time high surge. So yeah, that's kind of all I got, is just a bunch of guesses, really. Really a lot of extrapolation, more than makes me comfortable from prior markets. But I would guess after the super trend, which is pretty reproducible, we kind of know where that target is. After that, I would set zones from probably 93 to 98, and then 100 to 110. I know those are kind of close, but hey, them's the breaks. So let's put our drawings back on so that I don't get lost. Actually, let me see if this quickly corresponds to any horizontals that we've kept around. So what do we say? We said, I've already forgotten what we talked about. Okay, right here. So here's, 93. So there's the top there, and then into, it doesn't really match a horizontal. Honestly, maybe this 100 to 108 area between the greens. We found some support there that I was using for near-term TA back during the, when the bear market first started. I think those zones are kind of it. So, we can be we have high probability trade, going up into the weekly super trend whenever it hits. It's probably going to target, 80K and then, go a little bit above it, come down and retest wherever the weekly super trend was upon breakout, let's say 80K, and then it'll move up into some trading range. We'll look at that down the line. What could that look like in term for Ethereum? It's like kind of a crapshoot. Ethereum can consolidate, if Fed monetary policy stays restrictive. It of course went down while Bitcoin was just merely consolidating here in the first half of 2023. It still went to the weekly super trend. It still shot above it into sort of a prior trading range, just like Bitcoin. But after that, went down, whereas Bitcoin stayed kind of flat. In 2018, again, kind of same deal. It went substantially, almost 70% above the weekly super trend, coming out of the bear market bottom. But then it dropped way more than Bitcoin. Even before COVID, just with the the Fed kind of scaring people in second half 2019, Ethereum went down. So while I do think that monetary policy is about to become more accommodative, we do need to understand that, even as Ethereum targets, it's going to target 2450, for the weekly super trend, probably shoot above it into, it usually goes to the top of a prior consolidation range, which, I was being conservative and saying it was this one here, which is about 2650. That's why I marked possible CSI final target. So I think 2450 to 2650 is probably where ETH is going to find some resistance upon breaking up. Another possibility is that it does, head into, this would be really exciting if it gets to the 2850 to 3200 range, mostly because we should be at 3200 and forming a new floor sometime by summer of next year. Like 2850 to 3200 should be the bear market bottom in 2030. So you really want to see this solidify. And if that happens sooner, like out of the super trend breakout, it would be fantastic. But wherever it tops out, whether it's 2650 or 3250, we have to take into account that, Ethereum does tend to come back down. Here it came back down 30% back in 2019 with a lot more crisis, banking crises in the works. Came down 60%. I don't think it's going to do that, but 30% is certainly possible. And then you also have to consider, even with the Bitcoin chart, with how well the charts have taken care of us this year, and how everything is fired off perfectly, DCB, LCB, CSI, all these acronyms, all these lovely things that really helped us through this bear market, there's still one piece that hasn't occurred, and we have to respect it, and that's the 364-day low. Here in 2022, 364 days after the top, it hit a major low. In this case, it was the final low. In 2018, 364 days after the top, Bitcoin hit a major low. In this case, it was also the lowest low. That's not always, hang on to that because I want to come back to this. And then in 2015, it was a little bit longer. It was about 400 days to the major low. It was around here from the top. And that was... So yeah, it hit its true bottom in day 413, and this is a double bottom here in August 2015. Just going off the first bottom because there's no reason for us to count out that far. But you're looking at roughly a 364. That's the fancy. That's like the pretty number that YouTubers like to say, the 364-day low. Well, it's actually 364 until about 413, but call it a month. So we're looking for the famous date, October 5th, until about middle of November for a low. And that lines up because everybody's looking for Bitcoin to have some kind of fresh new bottom, even though the indicator is already fired off saying that it's not going to go below 57,750. However, I think with SPY, which tends to, it's overheated, it tends to come down in October. Why not have our cake and eat it too, where we get a low somewhere in I call both of these 364, but this is actually 400. Why don't we get a low here in the 364-day window from October to November, but it's a higher low and just blow away the whole market, where not only do the charts work, but it just pisses off bears and bulls alike. That just seems so crypto. So that's kind of my base case, is that Bitcoin's gonna, it's gonna go up into this, wherever it goes, 80 80 something K, 80 plus K, come back down into a higher low in the famous low window, disappoint everybody, and then it'll be off to the races. And if that happens, of course you can imagine Ethereum doing one of these where it drops more than Bitcoin, drops 25 to 30%. Let's say it makes it to our lower target of 2650. It's going to come back down into potentially 1850 to 1940 pivot, which is a massive number. We know 1940 and 1850 are just like huge numbers that keep getting crossed throughout Ethereum's history. So like I would absolutely keep 1850 to 1940 as like a little target window for October, November. It seems too perfect. But regardless, we do have to respect that everything this bear market has played out exactly as the charts would tell us, which means that the low is still missing. It's a puzzle piece we have to respect, and we have to assume that even though we should be getting a really nice pump into the super trend and above, there should be a low coming after that, and should be a higher low. I mean, hell, it could come all the way back down to 60K, and the indicator would still have proven true. So be careful, once this window arrives, certainly after the daily cycle top in like mid-August. Mid-August is infamous. The days of August 17, 18, 19 are like the 3 worst days in the history of Bitcoin. It's always red days. We don't have time for it in this video, but you can do it on your own. It's just a miserable set of days. Literally just leave the charts. Don't look at charts on August 17th through 19th. I'm guessing after that pivot point, that's probably when the low could start, combining both the the negative back half of August with, the Fed conference in Jackson Hole, then red timber, then the expectations for an October low. There's going to be a whole lot of headwinds for markets, in those weeks. Why not have a little reset, scare the bulls, out of their precious 80K position, and then set a higher low, and then, we're off. That's kind of my base case. That's what I'm picturing. If you have any further questions or comments, let me know here or in the Discord. Thanks guys for listening, and talk soon.